Money FM 89.3. Best of breakfast. The Bigger Picture, only on Money FM 89.3.
Welcome to The Bigger Picture. We're on to the mid of February, and that means it's yet another set of Singapore Bank earnings results to look forward to. And just last week, DBS kicked off the trio of earnings by reporting another impressive set of results for its fourth quarter of 2024. That's bringing its full-year profit to a record $11.4 billion. And of course, that announcement took the bank's shares to above $46 for the very first time. And today, we're just in for another treat, with UOB having released their latest set of earnings results just an hour ago. So to help us crunch in the numbers and paint an outlook for the bank in the year ahead, let's welcome on the show Yeap Jun Rong, the market strategist at IG Markets. Good morning, Jun Rong. How are you doing today?
Hey, good morning, Dan. I'm good. How are you?
Good myself. Now, Jun Rong, lots to break down in terms of UOB's latest report card. So it's the widely anticipated moment of the season, with our beloved Singapore Bank reporting their report card today, United Overseas Bank. And expectations are high for the bank, given that it's been posting record earning numbers in the past few quarters. So what are you reading from UOB's latest report card, and what are some highlights coming up from this quarter?
Yeah, I think looking at the results, UOB definitely closed off its full year 2024 well. We are looking at a record net profit driven by strong net fee income along with strong trading and also investment income. So you just look at its fourth quarter net revenue, kind of stable, 1% year on year to 3.46 billion. Profit beat market expectations. So net profit, including one-off charges, was up 8.6% to 1.52 billion. Of course, some of the bright spots that I'm seeing, one is that there's an improvement in the loan demand. So we have been tracking some of the lending data from MES, which did show more borrowing in fourth quarter from both business and consumers, potentially due to higher confidence around the economy or the growing digital transformation, AI trend, kind of supporting business investment. So that kind of show up in the UOB's results with a 5.3% growth in its loan portfolio. Of course, on the other hand, we are also seeing net fee income being kind of stable. But I think one of the important aspect that we are looking is the net interest margin. So we know that, the net interest margin is kind of important for the bank's results. And we are seeing that there is somewhat of a negative impact, I would say, due to the Fed's rate cutting cycle. So for fourth quarter, there is a 42 basis point decline in the Singapore's 3-month SORA. So that directly translates to a drop in the UOB's net interest margin to around 2% from 2.05%, which is its lowest since third quarter 2022. But of course, that is kind of being cushioned by this improvement in the loan demand. So that overall helped to mitigate the fall in the broader net interest income. So generally still stable in that sense.
Fantastic. Thanks a lot for that comprehensive breakdown, Jun Rong. Now, this is the moment that every income stream lovers is also waiting for: dividends. And DBS definitely set the tone for our local banks here. So what's in it for UOB's latest dividend then?
Yeah, so I think following DBS results, I think UOB is also kind of following DBS path in trying to return more excess capital back to shareholders. And this really come on the basis that the bank's CET1 ratio, which is kind of a key measure for the bank's financial strength, really indicate that they are very robust. They are very resilient to withstand a financial stress. So just to give some context, MES requirement for this ratio is around 6.5 to 9% for the big banks. UOB is actually at 15.5%. This is very robust, and that could really account for that 3 billion share buyback plan that they've just announced. So they plan to redistribute this excess capital over the next 3 years through share buyback. And of course, for dividend lovers, there's a new special dividend of 50 cents being announced. There will be issued over 2 tranches in 2025. Final dividend also saw a 4% increase from last year to stand at the current 0.92 per share. And translating that, that really gives a forward dividend yield of close to 6%, which is definitely one of the highest dividend yield across the region for those regional banks, and that is very attractive in my opinion.
Wow, what a sweet treat it's in for investors. Now, Jun Rong, over the past year, the banks have outperformed the broader Straits Times Index, which returned about 22.7% as of 31st January 2025. UOB, meanwhile, jumped by 32.9%. So, taking into consideration how it's been performing, how do you think UOB's $5 billion acquisition, of its Citigroup portfolio in Thailand, especially its integrations in Malaysia and Indonesia, and Vietnam, which is set to be completed by this year, how do you think this is set to scale its business further and improve its share prices for the years ahead?
Yeah, in my opinion, I think following all those series of acquisition that really comes as the product of that very strong capital buffers that they have to actually turn to this kind of inorganic form of acquisition. I think it really does show up in its results, looking at a very strong momentum in terms of net profit, despite all those, one-off acquisition costs. And overall, it's really kind of hard to find fault with UOB results in that sense. And they have been delivering very strong income returns to shareholders. And even though you mentioned that, share price is up more than 30% over the past year, just year to date, share price is up another 5.86%. But I believe that looking at that very strong prospects and that resilience in terms of net interest income, which really takes up 2/3 of the bank's earnings, along with some of the momentum that we see in terms of wealth management activities, it does seem that, UOB still seems very attractive, looking at their dividend yield and their earnings and momentum.
All right, thanks a lot for that, Jun Rong. Now let's shift gears over to the US, where President Donald Trump just recently announced that he would likely impose tariffs on automobile, semiconductors, as well as pharmaceutical imports of around 25%. And that is likely to widen the president's trade war. So can we first talk about, what kind of impact do you see it having, especially here where we're at in the Asian markets? Because we're seeing some slight reactions from Australian market with shares in Australia dropping about 1%. While equity index futures for Hong Kong and Shanghai, they're all pointing to decline. So what kind of impressions are you getting firsthand?
Yeah, I mean, Trump 2.0, new day, new US tariff threat that we are hearing. Now it's 25% tariff. Not implemented yet, but he's mentioned that he'll probably announce that on 2nd of April. And he actually floated this 25% tariff on foreign cars, semiconductor chips, and pharmaceuticals. So my opinion is that, from now until 2nd April, he has laid out this very good runway in a way to bring a trading partner to the negotiating table. And it really gives room for countries to find other kind of consensus apart from these tit for tat import measures. And we have seen, India really kind of warming up to Trump recently. So that kind of set a precedent for other countries to follow suit. Of course, the thoughts on investors' mind will ultimately be whether this recent threat is really just to bring trading partners to the table, or is there an actual implementation in the making. I think this will always be the uncertainty that markets have to deal with. And if you look at some of the impact, of course, if this tariff were to be able to go through, Asian automakers around Japan, South Korea, China, those will be impacted. US has been their primary destination for automobile exports. And in a way, I believe Japan and South Korea may kind of explore shifting more production to US plants to bypass tariffs. But of course, on the other hand, I think China may be a little bit more tricky in that sense. Whereas in terms of semiconductors, Taiwan, South Korea, those will be in the crosshair. But they actually have manufacturing plants in US already. So I think it could be a move from Trump to really ramp up some of the production capacity on those fronts. And I think looking at current dynamics, countries are really more inclined to finding a consensus with the US. We have seen countries committing to purchasing US goods, potentially shifting production to the US. So this is a kind of a contrast to the hard retaliatory measures that markets were kind of fearing. So I believe that we may expect more negotiating talks to surface. And we will have to see how it goes from here.
That's for sure. We've got about 2 months or so, or less in fact, before President Donald Trump actually puts it into pen and paper. So we're just going to watch it very closely and see how this story develops over time. Meanwhile, thank you so much for joining us this morning. We've been speaking to Yeap Jun Rong, the market strategist at IG Markets, covering all about UOB's latest report card as well as the possible impact of Donald Trump's latest 25% tariff. Thanks for joining us, Jun Rong.
Thank you, Dan.
Keep it right here with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.